Good morning, sir.
Hello. Good
Good
evening,
evening.
Prerna, Shifa,
Yes, good evening, sir.
Zainab. All right, everybody. So, in the previous class, we started a chapter which was dissolution of the partnership form, and we understood the basics of the dissolution of the partnership form. Like I explained the meaning of the dissolution, wherein I've told you that dissolution is basically termination of the partnership business, wherein partners have mutually agreed to close down the operations of the business. And when a business or when the partners decide to close the operations, at that time, when the dissolution is taking place, Partnership Act 1932 requires that all the assets need to be dissolved. Sorry, all the asset need to be disposed of, and all the liabilities should be paid off, including the internal and the external liabilities. Internal liability, by internal liability, I mean the liability towards the partners, and the external liabilities basically means the liability of the business towards the outsiders other than the partners or the stakeholders of the business. And if we talk about the dissolution from the accounting point of view, I've told you that when it comes to dissolution of the partnership firm, we need to prepare three accounts: realization, partners, and the partners account, and the cash or bank account. It may be see, I'm not saying that we will be preparing cash and bank, both the accounts. Which account will be made, whether the cash account it will be or the bank account, depends upon the basically the requirement of the question. If question requires us to prepare the bank account, or then accordingly we will be preparing the bank account, otherwise we'll be prepare the cash account. So depending upon or the need of the business or the account, need of the question, we will be preparing the cash or bank account. And after understanding all these things, we started our discussion upon the realization account, wherein I've told you that realization account, at the time of preparing the realization account is just like any other account or ledger, but you need to understand few points regarding the realization account. That first thing, while preparing the realization account, we transfer all the assets out of the balance sheet to the debit side of the realization account, excluding some asset like the cash, bank, profit and loss, advertisement expense, and miscellaneous expense. These expenses are excluded. These items are excluded. These are not recorded under the debit side of the realization account. Apart from all these assets, all other assets are recorded on the debit side, like plant machinery, furniture, investment, all other thing, goodwill. Talking about the liabilities, we need to transfer all the liabilities on the credit side, excluding these items: partners capital, partners loan, P&L, reserve, open compensation, etc. And then after doing this, you need to keep that in mind, that partners loan account won't be transferred to the realization account. This will in fact need to be transferred to the partners, sorry, the bank account or the cash account, depending upon whatever we are making. And then we need to keep in mind that partners capital account, P&L, reserve, and workman compensation, these item required to be transferred to the credit side of the partners capital account. See, these things are very important. You need to keep that in mind while solving the question, otherwise you will probably commit a mistake. Next point is realization expenses is also known as dissolution expenses, and if there are any dissolution or realization expenses, we need to write that down on the realization account debit side as well. So after understanding all these things, we did a question in the last class. Question number one, I think, yeah, we completed this question in the last session, and I think I've given you one question for the homework that I think you might not have completed, because this was little difficult comparing with the previous question. So just tell me whether you guys have tried this question or not. Anybody having anyone of you have completed this question? Prerna, Venisha, sorry, Zainab and Shifa.
So I didn't complete it, but I tried it.
You have tried it. Okay, oh, that is
Yeah.
good. That's nice. Prerna, tell me whether you tried this question, Zainab. I know this is this
No, sir,
comparatively
I
difficult
haven't.
than the previous one. Yeah, I'm not expecting any of you to finish this question because it is obviously a difficult question comparing with the previous since we haven't covered a lot many questions in this chapter, so it is a little difficult for you to complete it. Anyways, let me just start this. Let me just explain how we will be actually solving this question. Just give me a moment. Let me just open my tab. Just a moment. All right. So as the question says, we need to prepare the reconciliation statement in this question, not the sorry realization account for this question. Sorry. So for that purpose, we will first of all prepare the format of the realization account. All right. So first thing that we need to do, we need to transfer all the asset on the debit side of the realization account. So we'll write for that purpose. We'll write down two sundry assets, and then we will transfer all the liabilities. So by sundry liabilities. So let's just first of all transfer all the asset. On the asset side, we can see we have building, investment, debtor. Then provision for doubtful debt is a liability. You need to keep that in mind. Less provision for doubtful, whatever the doubtful debt is, 4,000. It is a liability, right? You need to transfer this on the liability side. Then bills receivable is an asset. Bank needed not to be transferred to the realization account. P&L account, debit balance, goodwill will be transferred. Okay. So let me transfer all these things, starting with the value of this building. I'm sorry, everyone. Okay, so first thing that we need to do, we'll transfer all the asset, starting with building. Value of this was 1,20,000. After that, investment. This was valued at 30,600. Then debtors, it was valued at 34,000. Then bills receivable, I'm writing it as BR only. Bills receivable indicated by BR, which is 37,400. And then finally, goodwill. Only these assets will be transferred to the asset side. Coming to the liability, talking about sundry liabilities, we will transfer. Just a minute. Starting with, first of all, we'll write down provision for doubtful debt. It is a liability. Provision for doubtful debtors, 4,000. Then on the liability side, we had creditors of rupees 80,000. Then Mrs. Pradeep's loan is also a liability. Amount was 40,000. And then investment fluctuation fund was also there. It is also a liability. Investment fluctuation fund, 8,000. Investment fluctuation fund of rupees 8,000. Okay, so we transferred all the asset, all the liabilities on the respective side of the realization account. Now, what we will do, we will come back to the question, reading the basically the adjustment part of the question. Pradeep agreed to pay off his wife's loan. So Pradeep have agreed to pay his wife's loan. So his wife's loan was 40,000. But Pradeep have decided to pay off this loan. So what we'll do, we'll write down on the debit side. We'll write down the name of the Pradeep to Pradeep's capital account. Since Pradeep have decided to pay off wife's loan, so ultimately this will be written as Mrs. Pradeep's loan. This will be discharged by Pradeep at full value, that is 40,000. Then question further says that half of the debtors realized 12,000, remaining debtors were used to pay off 25% of the creditors. Now you need to understand one thing. See, first of all, let me just explain. It says that the total half of the debtors realized 12,000 and remaining debtors were used to pay off 25% of the creditors. So first of all, let's take the value of the debtors. What was the value of the debtor? You remember that? Value of the debtors. Value of the debtors was
34,000.
34,000. Yes.
Yeah.
So out of 34,000, question says that half of this we will be able to realize 12,000. That means 50% of 34,000 is how much? It is, tell me, 17,000, right?
17,000.
So the value of debtor have sorry 50% of the debtor valued at 17,000, we will be able to realize 12,000 out of it. So 12,000 of cash we will be able to recover from the 50% of the debtor. Remaining 50% question says, regarding the remaining 50% question says that remaining 50% of the debtor will be used to pay off 25% of the creditor. This is very, very important. Remaining 50% is how much? This is 17,000. This 17,000 of debtors will be used to pay off the creditors. We will be paying off creditors using the remaining 17,000. And we won't be actually making any payment. Question says that 50% of the debtor will be used to adjust 25% of the creditors. So first of all, just tell me what was the value of the creditors. Creditors were of 80,000, right? So 25% of 80,000 will be how much? 25% of 80,000 will be how much? It will be only 20,000, right? Right, everybody? So this 17,000 will be used to write off or to pay off 25% of the creditors. That means 20,000 will be paid off or adjusted with the 17,000 of debtor. This is called, keep that in mind and remember this. This is very, very important. This particular thing which is happening, this is called inter adjustment or inter settlement of the asset with the liability. Inter settlement of the asset with the liability. This is asset, right? And this is a liability. So what is happening here? We are settling the assets with the liabilities. This is called inter settlement of the liabilities with the asset. You need to understand this very well, that inter settlement of the asset and liabilities, inter settlement of asset with the liabilities is not reflected anywhere in the realization account. This particular event won't be recorded in the realization account, won't be recorded because it is of no relevance. It has no relevance from the viewpoint of the realization account. So therefore we won't be talking about this because this is pure inter settlement of the asset with the liability. Got it? That is not the matter of concern for the realization account. So we won't be doing any treatment or any or any entry for this particular thing that happened. We'll only discuss the
So,
50% of the, yeah.
sorry, will we have to do this later in the other accounts, like in this chapter?
No, no, no. We won't be doing
Partners
anything
or
about this.
cash?
Neither in the realization account, nor partners capital account, nor cash account. Nothing. No, it won't be reflected anywhere in any account. This is just pure settlement, inter settlement of the asset and liability. Inter settlement of asset and liability is of no relevance from the realization point of view. Oh, sorry, though from the dissolution point of view.
Okay, so thank you.
I hope this point. Okay. So if it is clear, so that basically the entire statement basically means that we will able to realize 12,000 of cash out of 50% of the debtor. So I can write this on the credit side as by bank. So why you are using bank account this time instead of cash account? Because it is bank account which is given in the balance sheet. See, you have on the asset side a bank balance available 6,000. So it will be better if you use bank account instead of cash account. So bank account we will be able to realize how much out of debtor. Debtor will be able to realize 12,000. Okay. All right. Now moving on to the next thing. Next adjustment. It says investment sold to Rajesh for 27,000. Investment sold to Rajesh for 27. That means Rajesh will be taking over the investment of at rupees 27,000. So let me just do the entry for this as well. First of all, let me extend realization account. Okay. So Rajesh is taking over the investment. So I'll write down the name of Rajesh, right? To, sorry, by Rajesh capital account. So question says that we have sold to Rajesh. So if we have sold to Rajesh, that is different from Rajesh is taking over the investment. If we have sold to Rajesh, that means we must have sold this on cash basis. We will presume that we will be able to realize uh, 12,000, 27,000 from Rajesh on account of sale of the investment. So we instead of debiting, sorry, instead of debiting Rajesh's capital account, let's just transfer the entire amount to the bank. Investment will be sold for cash to Rajesh. So let's just write that down here, 27,000. All right. Moving on to the next point. It says building realized 1,52,000. That means we sold building at a value of 1,52,000. So building, we will be able to realize 1,52,000 out of it. Done. Then question further says in the adjustment E that remaining creditors were to be paid after 2 months. They were paid immediately at 10% discount. Now see, you remember that we paid off 25% of the creditor using the debtors. That was inter settlement of the liability with the asset. 25% was settled with the asset. The question arises, what about the remaining creditors? 75% of the creditor is still pending to be paid, right? 75% of the creditors were still pending. So question says that the remaining creditor means total value of the creditors earlier was 80,000, right? Out of 80,000 of creditors, 20,000 of creditors were adjusted with the debtors. 25% adjusted with debtors, right? Remaining 75% is still there. It is still remaining. Yes or no? Everybody, this is remaining, right? If 75% is remaining, question says that remaining creditors were to be paid after 2 months. So we were required to pay creditors after a period of 2 months, but we have decided to pay them immediately. And because we are paying them immediately, so we have been provided with a discount of 10%. Since we have decided to pay off the creditors, remaining creditors, which is 75% of 80,000 will be how much? It will be 60,000. So since we have decided to pay off the remaining creditors immediately, so they have they are allowing us a discount of 10%. So 10% of 60,000 is how much? It will be 6,000, right? So amount that we will be paying to the creditor will actually be equals to 54,000. Is that clear, everybody?
Yes,
Is it
sir.
clear? Yes or no?
Yes, sir.
Okay. All right. Just a minute. Yeah. Okay. Acha, one more thing. It was question says that 10%. Acha, the rate of interest was sorry. Rate of discount was on per annum basis. I'm sorry. Just a minute. There is a correction. The question says that we will be provided with a discount of 10% per annum. Per annum. So that means since we just paid the entire amount immediately that needed to be paid after 2 months, we have decided to pay that immediately. So we will be given a discount of 10% for 2 months only. All right. So 10% we will be calculating discount like this. Discount will be calculated as 60,000 into 10%. This amount needed to be paid after 2 months, but we have decided to pay this immediately. That means 2 months prior to the date before the date of maturity. So 2 upon 12. By applying this formula, you will be able to calculate the amount of discount that we have got. So this will give you just a minute. Yeah, this you will be getting a discount of 1,000, and remaining amount will be paid to the creditor 59,000. This is the amount that will pay to the creditor through bank. Tell me if it is clear, yes or no. Everyone, please tell me if anybody want me to explain it again or repeat it. Just let me know so that I can explain it again. Prerna, Shifa.
It's clear, sir.
Yes, it's clear.
Shifa, is that clear to you? It is clear. Okay. So let's just do this quickly. So entire statement basically trying to say that the 75% of the creditors will be paid immediately at a discount of 1,000. So we'll write on the debit side as well, since we are paying to the creditor. So we'll write it as to bank account. All right, done. Moving on to the next adjustment, it says bills receivable were settled at a loss of 1,400. This means that we will be able to realize bills receivables as well, but at a loss of 1,400. You need to recall the value of the bills receivable. Bills receivable was at 37,400. Question says that we will be able to realize this bills receivable, but at a loss of 1,400. So bills receivable will be realized. That means we will be able to collect amount in our bank account, 37,400, but at a loss of 1,400. We will simply subtract 1,400 out of it. So this will give you 36,000. Understood? Is that clear, everybody? One last item was there. Realization expenses amount. Realization expenses 2,500. So as I told you, realization expense need to be recorded on the debit side of the realization account. Realize under the bank account. Realization account paid. Realization expenses paid. And expense was 2,500. So we will write that on the debit side. Done. We recorded, or we treated all the adjustment. We recorded all the values. Now I think I can just total all these value and can calculate the profit or loss. Okay. So totaling the credit side, we will be getting 3,59,000. 3,59,000. And when you will subtract all the debit side values, you will find that we will be having a profit. So to profit will be transferred to partners capital account as per their profit sharing ratio. Profit transfer to Pradeep, capital account, and Rajesh's capital account. And amount will be 18,300 and 12,200. So this will be giving us a total of 30,500. And now we can total both the sides. 35,000. Sorry, 3,59,000. Tell me, everybody, understood? Is this question clear to
Yes.
all of you?
Yes, sir.
Prerna, is that clear to you as well? Yes, okay. You're still writing it, or shall we move to the next question? Just tell me whether you are done or not. Zainab, done? Just tell me if anyone want me to scroll to any specific part of the solution. Zainab, Shifa, Prerna.
Done, sir. Done, sir.
All right then. So since it is done, so let's move to the next question. We'll do one more similar question. And okay. Okay, guys. So this is question number 3, pretty much similar to the previous question. I want you to try this question now. Let me read this question for you. And if you find anything difficult, do let me know. Otherwise, try solve this question. It says Ashish and Kanav were partners in a firm, sharing profit and loss in the ratio of 3:2. Their balance sheet for the year is given. On the asset side, you can see we have a bank balance of 35,000. The stock, debtor, furniture, plant, investment, profit and loss account. On the liability side, we have creditors, provident fund, creditors, and employees provident fund. This is not trade creditors, employees. Trade creditors is 42,000 and employees provident fund is 60,000. Guys, employees provident fund is a liability. You need to keep this in mind. Employees provident fund is a liability. Then Mrs. Ashi's loan is there, Kanav's loan, workman compensation fund, investment fluctuation fund, sorry, investment fluctuation reserve is there. Okay, so investment fluctuation reserve is uh it is not, yeah, investment fluctuation fund is a liability, workman compensation fund is also a liability. Then we have a capital balance of Ashish and Kanav. Adjustment are given. Ashish agreed to take over furniture at 38,000 and pay off Mrs. Ashish's loan. Debtors realize 18,500 and plant realize 10% more. Alright, so these adjustments are given. I hope you will be able to solve this question. So I'm allowing you 10-15 minutes. Take your time, try to solve this question. Let me know if you're having any problem understanding anything in the question. I'm waiting for your answers. Just solve this quickly. Let me know the answers. Shifa, Zainab and Prerna. If anyone having any doubt, let me know. Let me tell you about the liabilities. We will be transferring all the liabilities on the credit side, right? So trade creditors will be transferred to the liability side. EPF will be transferred, sorry, not the liability, on the credit side. EPF, Employees Provident Fund, will also be transferred. Mrs. Ashi's loan will be transferred, right? But Kanav's loan, Kanav is a partner, right? And Kanav's loan, since he's a partner, so this won't be recorded on the in the realization account. However, this is a liability, but we already discussed that partner's loan is not reflected in the realization account. Rather, this need to be transferred to the bank account. All right. Then workman compensation reserve. This is not workman compensation fund. This is actually reserve, and this the next item, investment fluctuation reserve. This is not investment fluctuation reserve. In fact, it is investment fluctuation fund. So the question messed up a little. It says workman compensation fund. So instead of workman compensation fund, you should consider this as workman compensation reserve. And the next item, which is written as investment fluctuation reserve, this is not actually investment fluctuation reserve. Rather, you should treat this as investment fluctuation fund. Now understand this focus and understand that workman compensation reserve won't be transferred to realization account. Rather, it need to be transferred to the partner's capital account. But investment fluctuation fund is a liability, and therefore it need to be transferred to the credit side of the realization account. I hope this point is clear, everybody. If anyone having any other problem, do let me know. Is that clear, Zainab, Shifa, and
Yes, sir.
Prerna? Okay then.
Yes, sir, it's clear.
All right, do it. Done, Prerna, Shikha? Or you are still doing it? Prerna, am I audible? Hello.
Yes.
Shikha?
Yes, sir, we're still
Shikha,
doing.
you are still doing it? Okay. Tell me, guys, what is the progress? Prerna, Shita.
And done, sir.
So can you help with the third adjustment?
You want help with the third adjustment. Okay, in the third adjustment, it says Kanak took over 40% of the stock at 20% less than the book value. Remaining stock was sold at a gain of 10%. The question is trying to say, let me explain this on the notepad, just a minute. You need to understand you need to consider the total value of the stock. Total value of the stock is 24,000, and Kanak is taking over 40% of the stock at a price less than 20% than the book value. So if the stock, if the value of the stock was 40,000, no, not 40,000, it was 24,000, no? 24,000. Out of 24,000, Kanav is taking over 40% of the stock. You need to first of all calculate 40% of the 24,000. 40% of 24,000 is how much? 24,000 into 40. This is around 9,600, right? So Kanak
Yes.
is taking over 90 stock having a value of 9,600, but at a loss of 20%, right? So loss of 20% basically means he is not giving 9,600 against for it. He will be probably paying less 20% less than the book value. So this is the book value of the 90% or 40% of the stock, and he will be paying 20% less than the book value. So 9,600 into 20% is how much? Into 20,
1920.
1920. So
Yeah.
that means minus 9,600 out of it. So that he will be paying only 7680 for the 40% of the stock. All right, understood. And what about the remaining stock? How much is still remaining? Remaining stock is 60%, right? It says that remaining stock will be sold at a gain of 10% in the market, obviously. 10%. So 60% of 24,000 is how much? 60% of 24,000,
14,400.
14,400, right? This is 40,400 of the stock having a value book value of 14,400 will be sold in the market at a profit of 10%. So 10% of 14,400 will be 1,440 rupees. So add 1,440 in it, you will get 15,840. So this will be received by way of cash, and this will be charged to whose account? Kanav's capital account. So this will be transferred to Kanav's capital account. They should be written by the name of Kanav's capital account on the debit side, and this should be recorded on the debit side under the cash account. Got it? Is that clear now? Understood? Shifa, is that clear to you?
Yes. Yes.
Okay. Okay. All right. So see, guys, I think you will be able to solve this question. Let me show you the correct solution of the question. Just a minute. Let me check whether I have the question solution for this question or not. Oh, I don't have the solution. Anyways, I'm telling you the values. Make sure you get these values in the when you calculate the answer. So after completing the realization account, you should get a total profit. You should get a profit of 20. Sorry, just a minute. Yeah, it should be 20,020 rupees. 20020. We will be having a profit of 20,020 rupees in the realization account. All right.
Yes.
Please note this somewhere. And once you finish with the solution, make sure you are also getting the same profit. If you do not get the profit, we'll discuss this question in the next class. Since we are already ahead of time, it's time to finish this session. So guys, this is it for today's class. All right, we'll discuss few more questions based on the dissolution. We'll probably be doing question number 4, 5 and other questions in the next class. Just let me check if I have any other question available.